Well, welcome back to Finance Uncut. Today's episode is the economy finished?
We're not going back to the same economy. This will be a different economy. And one of the things we hear from companies is that they've spent a lot of time since the pandemic arrived looking at ways to have more effective technology and perhaps fewer people. So you're going to see some of that in these public-facing jobs. So there will be millions of people who have a hard time finding their way back into the workforce and recovering the lives that they had just a year ago. And, I think it would be appropriate for us to continue to support those people. The recovery, though, here remains uneven and incomplete. The burden is still falling on lower income workers. The unemployment rate in the bottom quartile is still 20%. There's still 8.5 million people out of work. And this unevenness that we're talking about is a very serious issue. Viruses are no respecters of borders, and until the world really is vaccinated, we're all going to be at risk of new mutations, and we won't be able to really resume activity with confidence when people are out of work for a long period of time. The record shows empirically that their whole economic lives, and frankly their broader lives as human beings, can be damaged even permanently. So we want to avoid that, and I would say we have avoided a great deal of it. The really bad outcomes that we were concerned about a year ago have not materialized. Nonetheless, 9 or 10 million people out of work, and we need to keep supporting them and supporting the economy, and we will.
The Fed is a non-political, independent agency that serves all Americans. And our work has an impact on everyone's daily life, including students and teachers, even if that impact is often unseen. So when you're looking at the price of something in the store, or going to the ATM to withdraw cash, or looking at the rate that you would pay on a mortgage or a car loan, Fed policy, Fed actions affect all of those things. The job we've been assigned by Congress with monetary policy is to promote maximum employment and price stability. And that essentially means that we're responsible for maintaining a strong and healthy economy. We accomplish this task by conducting monetary policy. That is, that the Federal Open Market Committee, which sits here in this room where I am, sets a target range for the federal funds rate. And then we use our monetary policy tools to implement the policy. These steps influence interest rates and overall financial conditions throughout the economy, and thereby affect the decisions that consumers and producers make every day. We also do a range of other things. So we supervise banks to make sure they operate in a safe and sound manner and make loans to those who need them. And we create the cash that people use every day, among other things. So the Fed's a very interesting organization, but I would also want people to understand that we're a small part of the overall picture of our very large and dynamic economy, but certainly an interesting one. Great deal these days. We can see that the pandemic has changed our economy in some important ways. Only time will tell how lasting these changes will be. But I think we know that we're not simply going back to the economy we had before the pandemic, but it'll take time to see exactly what the changes will be. And we know that at the Fed, we need to watch carefully as the economy continues to get through the pandemic and try to understand the ways that the economy has changed and what the implications are for our policy. I think the place to start, though, is COVID is still with us, as you can tell, and that is likely to continue to be the case for a while. While more people are getting vaccinated, the pace of vaccination has slowed. A couple of months ago, we were ahead of many other similar countries in vaccination. Now we're falling behind. And one result you're seeing is the current outbreak of the Delta strain that we're seeing in some parts of the country. So one thing that's happened as the pandemic has continued is that people and businesses have improvised and learned to adapt, to live their lives despite COVID. And I would say it's not yet clear whether the Delta strain will have important effects on the economy. We'll have to see about that. In the meantime, you asked about changes in the way the economy operates, and I'll point to just a couple. First, and maybe most obviously, many people have had jobs that have allowed them to work remotely, usually from their homes, but sometimes from other parts of the country, all around the country, and indeed around the world. So For sure, the tendency over the remaining part of this year and next year will be for people to come back to their physical place of work at least part of the time. But it seems a near certainty that there will be substantially more remote work going forward. So that's going to change the nature of work and the way work gets done. It's going to change the nature of the workplace, because how often will people be in the workplace, and how's it going to affect different groups of people? For example, those of us who've been doing a job for a while can probably do our work well from a remote area. But if you're new to an institution or to a role, you might be better off being in person, because what you don't have is these casual conversations around lunch or sitting around during the day, walking down the hall and seeing people. So you miss that if you're fully remote. So this is something we need to be thinking about. In addition, many companies whose businesses involve extensive direct contact with the public have adapted their business models to the new world. The pandemic was many things, and it was certainly in a way, a global emergency that really called on all parts of government to respond, and the private sector, government and the private sector to respond. From the overall standpoint, though, the pandemic is primarily a health crisis. So the initial and most important response to the pandemic came in healthcare. Doctors, healthcare policymakers, and the researchers who created the vaccines. Second were the powerful actions taken by Congress in the CARES Act. Effectively, Congress very quickly and very strongly acted, and it replaced the lost income for the tens of millions of people who lost their jobs, and also replaced that income for the many, many small businesses that had to close temporarily. So this was incredibly important, and I think history will look back on it as a uniquely important and successful set of initiatives. There's also a role for the Fed, and that's what you're asking about. So what we did was guided by, again, everything we do in monetary policy is guided by our dual mandate to promote maximum employment and price stability for the benefit of the American people, along with our financial stability responsibilities. We acted very quickly, very aggressively as soon as the pandemic really manifested itself in a serious way in early March. We rapidly lowered interest rates to near zero, and that has the effect of supporting economic activity. Lower interest rates make it cheaper to borrow. They give people more money. They spend less money servicing debt, and they generally support economic activity. Lower interest rates also feed into other asset prices and create financial conditions that are generally more supportive of economic activity. We actually provide all of the physical currency, so folding money, and we also operate some elements of the payment system that enable physical cash and electronic transactions to move reliably through the economy. Now, historically, our payment functions have evolved over time as payment methods have changed. When the Fed was founded in 1913, cash and checks were really the predominant means of payment. Today, as you note, non-cash electronic payments are quite large. In fact, are much larger both in number and quantity than physical cash payments. And they're also growing faster. Notwithstanding that, Americans still like to hold paper money and some coins as well. The use of physical cash is growing here, but it's growing very slowly. And in many cases, interesting, particularly in some of the Northern European countries, the use of physical cash is really declining, and that explains some of their interest in wanting to have more digitized financial systems. So, both. You're right there. Your perception that digital money is really becoming more and more important is absolutely correct. The financial system, payments, and all that. Most people's financial lives are fully digital. And most of that digital finance takes the form of a bank account. So you interact with your bank account digitally. And of course, it's insured up to $250,000 with deposit insurance. Yeah, clearly today's teenagers have lived in interesting and challenging times with the global financial crisis of 2008 to 2010, and then the pandemic of 2020 and 21. And I imagine everyone's hoping that economic times will be less interesting going forward, and we certainly hope that's the case. But I guess what I would say is this. People should understand that the economy is ever changing. And through history, over long periods of time, the economy grows and living standards rise from one generation to the next. And there's every reason to think that will continue. We don't know at exactly what rate, but that's the overall picture. But within that longer run trend, sometimes the economy is growing at a healthy rate, and sometimes the economy slows down and even shrinks. And when it shrinks, we have a recession. And that means more people are out of work, economic activity is down. And in all likelihood, over the course of your students' lives, they'll see plenty of good economic times and also a few recessions along the way. And that's just something we call the business cycle. What's so notable about these two, the global financial crisis and the pandemic, is that they were, the global financial crisis was a financial crisis. And a financial crisis can create the worst kind of an economic recession. You can have a regular economic recession, and that can be quite painful. But when it comes with the collapse of major financial institutions and things like that, you get really difficult economic times for a long time. So we've built up the capital and regulation and liquidity and risk management capabilities of the banks to, I think, a very high degree. And I think that the financial system is strong now, and the financial system made it through the pandemic crisis.
Well, there you go, guys. According to Jerome Powell, we ain't going back to the way the economy used to be. In fact, I'd argue we ain't going back to life the way it used to be. I think 2019, we'll never see that again. You know, the last 12 months I've been just putting the pieces of the puzzle together, you know, and whether that's looking at our global debt bubble, our monetary system, central banks, interest rates, World Economic Forum, the Great Reset, global warming, climate change, or whatever they call it these days. Central bank digital currencies are coming, you know, the cough, the needles, the passports that they're talking about we're going to need. I mean, I can't believe Australia is the country that it is right now. The country that I grew up in, having all these restrictions and passports and mandates and lockdowns and curfews. You know, we believe we were a country that cherished freedom and liberty. But as you know, I've been preparing. I've been buying physical gold and silver and other commodities, and you know, getting assets out of the system. I've got investments in soft commodities as well, and investments in farmland. But I think my next move is to get out of the city. You know, as I put the pieces of the puzzle together, and being a Christian, I look at Bible prophecy and you know, I just think things are going to get worse. I don't think things are going back, and Jerome just said it. And so I spent the last couple of days looking at some farmland up in the mountains. You can see behind me, beautiful area. It's about 4 or 5 degrees cooler than down in the capital. And yeah, I think that's my next move. You know, look at Palantir. That just, you know, I've got more to say on them next week. So, you know, they've just bought $50 million worth of gold bullion, physical gold bullion. And central banks, whether it's Brazil, just recently purchased, 60 tons of gold. You've got Thailand, Russia, Hungary, you know, there's central banks everywhere. But, you know, I'll talk more about that next week. But, you know, just this price dump in gold and silver, I've used that to accumulate more. And I know many of you newer silver investors are pretty frustrated. But, you know, what do you want? Fiat currency? You know, gold and silver is insurance. That's how I look at it. That's not how I get rich. That's not how I create wealth, by buying the physical. That's my insurance. That's if the you know what hits the fan. And the way the world's going, yeah, that might not be too far away. So, you know, I've just been preparing. I think this is my next move, moving out of the city. You know, I talked to my dad who, you know, I grew up on a farm. That's my background, but you know, I talked to my dad who lives on the land. I talk about the mandates and the restrictions and that, and he's like, what restrictions? He lives on his land. He's out walking around his property. working fruit and veggies and whatever, his animals, so he doesn't care. But yeah, anyway, I just think things are going to get worse, or at least they're not going to get any better. And look, I've chosen not to take the needle, and I've accepted that I may not fly again because our major airline is bringing mandates in next year, and they're mandating their staff to get the you-know-what. And so yeah, I think that's the way it is. So anyway, what do you guys think? Love to see your thoughts and opinions in the comments below. Anyway, guys, take care. I'll talk to you next week. I've got a little bit more to say on gold and silver. I actually have a video where I actually think silver may actually fall a little bit more. So stay tuned for that. And also video next week on the gold buying. Some interesting data there. Anyway, guys, take care. See yous.